Assalamu alaikum students. Today we will learn full concept of control accounts. We will learn how to prepare control accounts, what is source of information of control accounts, how do they prevent from fraud, and how do they help in finding errors quickly. Students, there are some transactions given in front of you. As you already know that each transaction is recorded in one of the six journals. For example, first transaction is goods sold on credit, and you already know goods sold on credit are recorded in sales journal. So goods sold on credit, goods sold to Abdullah on credit will be recorded in sales journal, and in sales journal we will write date, name of the customer, and the amount. Second transaction is also of goods sold on credit. This will also be recorded in sales journal, goods sold to Bisma. And January 9 transaction is also goods sold on credit, will be recorded in sales journal. Similarly, goods sold to Rohma, all these transactions which are related to sales will be recorded in sales journal. Similarly, if we look at second transaction, third transaction, sorry, goods returned to us by Bisma, all goods returned to us by the customers are recorded in sales journal. So we will record the return of goods in the sales returns journal. So goods returned by Bisma recorded in sales returns journal. Goods returned to us by Abdullah will also be recorded in sales returns journal. Similarly, goods returned to us by Rohma will also be recorded in sales returns journal. Students, you need to remember we haven't yet made any debit or credit entry in the T accounts because in the journals T accounts are not prepared. Let us move to the next transaction. On January 20, Abdullah paid us his account by check after deducting cash discount. Whenever any payment is made, any amount received, it is always recorded in cash book. All amounts received and all amounts paid are recorded in cash book. So when Abdullah paid his account of 200 after deducting 5% cash discount, so 200 into 5% is equal to 10. That means we received the amount by check 190 and we allowed a discount of 10. So because we received the amount, it will be recorded on the debit side of the cash book. So discount allowed 10, amount received as 190, recorded on the debit side. Similarly, on January 22, Jaleel paid us his account of 300 after deducting 5% cash discount. So 300 into 5% will be equal to 15. So amount received is 300 minus 15, that will be 285, and the discount allowed is 15. So on the debit side in the discount column we wrote 15 and amount received by check is recorded on the in the bank column. And now students, let us move to transaction on 24th January. Students, Abdullah's account of 500 in the sales ledger is set off against his account in the purchases ledger. First of all, we need to remember the concept of setting off, then we will discuss it. So before recording this transaction, we need to know all goods sold are first of all recorded in sales journal, as we have already recorded, as goods sold to Abdullah recorded in sales journal, goods sold to Bisma recorded in purchase journal, goods sold to Jalil recorded in sales journal. After recording in sales journals, these are posted to their accounts. Goods sold to Abdullah will be debited in Abdullah's account and credited in sales account. Similarly, goods sold to Bisma will be debited in Bisma's account and credited in sales account. Goods sold to Jalil will be debited in Jalil's account, credited in sales account. Goods sold to Rahuma will be debited in Rohma's account and credited in sales account. So student, debit entries are made as soon as it is recorded in the sales journal, but sales is credited at the end of the month with the total of the sales journal, as we have done, as 42 is recorded on the debit side of the sales account, and it was picked from this total of sales journal. Similarly, when goods were returned by us, goods were returned to us by the customers, as goods returned to us by Bisma was correctly recorded in sales journal, then posted on the credit side of Bisma's account and will be debited in the sales returns account at the end of the month. Rohma's sales returns will be posted to Rohma's account. So first of all, our transaction is recorded in the journal, then posted to personal account, and at the end of the month, total will be posted to the concerned account. Sales returns journals total will be posted to sales returns account on the debit side. All amounts received, as we discussed, amount received from Abdullah is debited in cash book, will be credited in their personal accounts. This amount was received from Abdullah, debited in cash book and credited in Abdullah's account. Similarly, the check received from Rohma was debited in the cash book and credited in Rohma's account. Now let us discuss transaction number 24. Abdullah's account of 500 in the sales ledger is set off against his account in the purchases ledger. Let us discuss what is this transaction and how it will be recorded. Let us move to Abdullah's account. Students, Abdullah is a customer. All customers' T accounts are prepared in sales ledger. We sold goods to Abdullah. Amount is receivable from Abdullah. Let us suppose we buy goods from Abdullah. We also sell goods to Abdullah. We also buy goods from Abdullah. If this is the case, there will be two accounts of Abdullah. One will be in the sales ledger as a customer, and the other will be in the purchases ledger as a supplier. Let us suppose we have already purchased goods from him worth 500. One account in the purchase ledger shows that 500 is payable to Abdullah, and another account of Abdullah in the sales ledger shows that some amount is receivable from Abdullah. In this case, neither this 500 will be paid to Abdullah nor 500 will be received from Abdullah. We will simply set off this amount. How? We will debit 500 in Abdullah's account in the purchase ledger and credit Abdullah's account in the sales ledger. First of all, we will make a journal entry in the journal. Purchases, Abdullah's purchase ledger will be debited and Abdullah's sales ledger will be credited. This entry is also known as set off or contra. First of all, transaction will be recorded in the journal and then will be posted to his two accounts, one in the sales ledger and the other in purchases ledger. Now this account is cancelled and this 500 will be decreased from receivable amount. Rohma paid us 500 has already been recorded and discussed, recorded on the debit side of the cash book and credited in Rohma's account. Now students, when we received a check from Rohma, it was debited in the cash book and credited in Rohma's account, but on 30th January, Rohma's check was dishonored. So this transaction, above transaction of January 27 will be reversed. Now we will make a credit entry in the cash book and debit entry in the Rohma's account to cancel out the effect of previous entry of check received from Rohma. Now let us move to the last transaction, January 31. On the last day of the month, we came to know that Rohma has been declared as bankrupt. So we decided to write off that amount as irrecoverable. We already know that irrecoverable debts are recorded in general journal. So first of all, we will make a journal entry. Irrecoverable debt debit and Rohma credit. This will be posted to the debit of irrecoverable debt account as this one, and this will be credited in Rohma's account like this. And similarly, discount column on the debit side, its total is posted on the debit side of discount allowed account like this. Students, these are the T accounts of customers Abdullah, Bisma, Jalil and Rohma. They are the customers. All the customers T accounts are prepared in a separate book called sales ledger. Similarly, suppliers T accounts are prepared in purchases ledger. All remaining T accounts are prepared in general ledger. Now we already know that all transactions are recorded. Invoice, first of all, documents are prepared, then transactions are recorded in journals, then posted to ledgers. All this work is done by the bookkeeper. So if I say all this work has been done by the bookkeeper, students, bookkeeper has to record hundreds and thousands of transactions per month. There are chances of errors and that may lead to fraud if there is no proper internal check. So a senior person is required to check whether or not all these transactions have been recorded correctly in the journals and the ledgers. Now what will be done? A control account will be prepared by a senior person to check whether all the work done by the bookkeeper is done correctly or not. How to prepare a control account? Students, this is Abdullah's account. In Abdullah's account, sales of Abdullah have been recorded. Sales returns by the Abdullah have been recorded. discount allowed to Abdullah is recorded, amount received from Abdullah is recorded, any contra amount is recorded, and this is the total amount receivable from Abdullah. While control account is actually a total trade receivables account, this will be prepared by a senior person to check whether or not all the work has been done correctly or not. How to prepare this control account? We have this sales journal. Sales journal total is 4200. This will be posted to the debit side of sales journal. This is total of sales journal. Similarly, we have already prepared a sales returns journal and the total is 250. This total will be posted on the credit side of sales ledger control account. So this was total sales and the total of sales journal, and this is total of sales returns journal. So and this is total of discount allowed column in the cash book. This is the cash book and the total is 25, which we have recorded in control account on the credit side. Similarly, total amount received from the customers is 875, total of this column. So 875 will be recorded on the credit side. Contra will be taken from general journal. Irrecoverable debts are also recorded in general journal and the total will be obtained from general journal. Irrecoverable debts are also recorded. Similarly, dishonored check was recorded in the cash book on the credit side and the total will be picked from cash book. This is dishonored check. So source of information of control accounts is journals. You might be asked a question, what is source of information of total credit sales? You will write here sales journal. What is source of information of sales returns? Sales returns journal. Discount allowed cash book, bank cash book, contra general journal, irrecoverable debt general journal. Now this control account has been prepared. It is prepared from the totals of journals and the total amount receivable from all the customers is 1950 after balancing off of this sales ledger control account. Now students, let us learn how we can prevent from fraud by preparing sales ledger control account and how errors can be found quickly. Students, in the sales ledger there are 4 T accounts of customers. Number 1, Abdullah's closing balance is 720, Bisma's closing balance is 630, Jalil's closing balance is 600, Rohma's credit total closing balance is 500. Sorry, Rohma's account has been closed. There is no closing balance because the amount was irrecoverable. So if we list sales ledger balances 720, 630, 600, 0, the total amount receivable from all the customers is 1950 according to these T accounts from the sales ledger. While if we compare this closing balance with sales ledger control accounts balance, this is also the same. So students, if sales ledger balances closing total is equal to sales ledger control account, you can say there might not be errors in the work of bookkeeper. Students, in O level you are only given these values and required to prepare a control account, but in A levels you might be asked to reconcile sales ledger balances with sales ledger control account. In O levels, number one, you are asked to prepare control accounts. Number two, you are asked to give advantages or uses of preparing control account. So it helps to find errors quickly. It helps to prevent from fraud. Quick totals of trade receivables can be obtained from sales ledger control account, and quick totals of trade payables can be obtained from trade payables. Sometimes you might be asked to tell limitations of control accounts. Control accounts do not detect errors not affecting the trial balance. Number two, in the absence of internal check, control accounts might not be useful. Students, hope you have learned the concept of sales ledger control account. If you have any queries or any confusions, you can ask in comment section. Thank you.